What's going on, everybody? And welcome back. We got another stream cooking, and of course, we have to take the beautiful, beautiful victory lap from today. Of course, whoever could have seen, whoever would have thought this would happen? Oh, man. I have to think really hard about this one, and oh yeah, I forgot. It was me. Yeah, it was me. Remember a couple of the Showtime posts? Yeah. Oh, I gotta be honest. I would so much rather be in a position where I was absolutely correct from a bullish point of view. But I gotta be honest. I gotta be honest. Mixing it in from the bearish perspective every now and then feels unbelievable. We have people on we have people on this app who said they've been doing technical analysis for 30 years and there was nothing that they could find with this price action that was being a problem. So I thought I would just do a nice little recap. We're going to go all the way back to December for a couple quick clips before we get into the overall recap on today's price action, and then we can get into a little bit on the outlook moving forward and how we envision everything kind of shaking out from here. So before anything else, let me make sure I can get the chat up on screen. It should be there. Let me move this up to the front. Now there is a little bit of a delay, so that's kind of annoying. That's why I was kind of just standing there smirking at the camera for a couple of minutes before we really got going. But you guys should be able to see that pretty well now, the chat, just in case. So if you guys do have any names that you want to take a look at, feel free. We'll get to them at some point here tonight. If you have any questions about anything that we're going over, through indices or anything like that, of course, you can throw some questions in as well. But the first clip I want to take you guys back to here dates all the way back to December 14th. Okay, listen up.
Now, if we were to higher, eventually, I'm not sold that we're just going to nuke or go down before the end of this month. I actually think we start to make progress higher. Eventually, it would be nice to end the month somewhere in this Showtime pivot vicinity. And then if we were to get that final retracement, at least now, if we were to get one more retracement, let's think about this. So let's just say we reject the Showtime imbalance, come back over. Whether you bounce inside this volume imbalance or even maybe sweep this low, remember, you now have an untouched quarterly imbalance that had just formed, and that would be at 23,904. Where's 23,904 lining up with on your current weekly? It would be a turtle soup of that low that we put in a couple weeks ago. So just to be fair, I don't think the expectations really are going to be that high unless we just seriously rip face. If we rip this 4 hour up and we really don't have it now, if we were to higher,
wow. So that was from December 14th. That's pretty interesting. All right, now let's fast forward a little bit more, and let's I believe this one was the 5th of January. Let's see really quickly. Hold on.
Time frame, it's just going to be a little lower probability, that's all. So as we go down into the weekly, again, not really much doing here. We are holding on to that previous bullish volume imbalance yet again. And we do have a volume imbalance, which gets us up to 26,004. That also leads you into your daily Showtime, which I think ultimately is the draw on liquidity. I do believe that we're ultimately going to get to this point. Now, what's it going to take for us to get into that point? That's the question, okay? We still really haven't shown any urgency out of this bullish level just yet. There's no chance of a bullish fair value gap to form today with the way that we close with the wicks. So really, the rule of thumb for me is if we're not forming any imbalances, and that goes for either up or down, to me, that's chop, right? If I see this, let's just say this is the setup on like a 5.
Truly amazing. So we're talking about it back in the 5th of January, about that Showtime imbalance being the draw. All right, now how about the one from literally 24 hours ago? How about that one?
Let's say. We're currently above it, okay, which is great. To me, there's really nothing holding us back from going to get the relative equal highs at 26,118. And it's actually the exact number 26,12725. That puts you inside that daily Showtime imbalance. That will clean up the relative equal highs there. And this to me is the ultimate pivot for us moving forward throughout the rest of this quarter. To be honest with you, right? And it's funny how it lines up exactly with what you have. 3 out of the Magnificent 7 having earnings this week, right? Or is it 4? Might be 4. But it's kind of funny how that works.
Sorry, that was Sunday. I got a little ahead of myself. That was Sunday here. Now I'll pull up real quick what we had from yesterday. I got that right here. Last but not least, but when we victory lap it, we do it right. Okay, we gotta really be extensive with this. We come with all of the receipts as always, because why wouldn't we?
Happy show.
Here we go.
So, happy Showtime. Okay, so we got into our Showtime imbalance. And thus far, we have made a subtle reaction to it. I will lead by saying that if, the bulls get too comfortable, I think that could be a real big mistake here. I'll explain why as we get beyond just the indices. There's more specific individual names that I think could cause problems and throw a bit of a wrench into things. So we'll go over to the daily. And from the daily perspective, again, we got into that Showtime daily imbalance. And thus far, we are rejecting pretty sharply off of that level. Now, in the process, you do have a bullish breaker.
How sharp was it? It was 700 points. 700 points?
and you also do have a bullish daily imbalance. Okay, so these are the two real points of interest.
Where we closed.
Now, if this
We
retracement that
closed
we're currently
inside this.
undergoing right now were to gravitate down towards into that daily fair value gap, this would then be essentially our next pivot. If we were to slip up on this, I think we have real problems, like real, like relative equal low problems here.
Real problems, like 700-point problems. Oh yeah, we saw that this morning, guys. Wow. Well, unbelievable. Would you look at that? Ain't that something? Anyways, all right, I had to do it. I had to get it out of the way. This is something that I've been discussing for quite some time. I will even go in depth and explain the idea behind Showtime because it isn't only exclusive to what you see on indices. This also applies across the board on any stock that you want to look at. It's just about understanding the whole concept that goes behind this, okay? Now, of course, as always, I like to preface any live stream, especially when it's with the public, everything that you hear here, I want you to go back and back test it and prove it to yourself. It might sound great that I'm saying it. It's probably going to sound great when someone else says it. But when I say it, I want you to be able to back test it. And I know you will, or else I wouldn't be saying it in the first place. I know a lot of these other people, they'll say something, you'll believe it, and then it turns out to be straight up garbage. And then you're in a terrible position moving forward because you really don't, you said this was how it worked, but it's not working that way. And you can't go back and back test it because you don't even really know and understand why there is any relevance to that level specifically in the first place. Okay, so let's pull it up. We'll come back over. We'll do the whole top down in a second, but let's talk about Showtime in particular. Okay, so let's zoom in here from a daily perspective. And now the reason behind this level. Now, I did a whole thread on it the other day, and again, I'll echo this just for the purpose of this specific instance in price delivery, because this happens quite a bit. It can happen on any time frame, right? It can happen on a 5-minute time frame. It can happen on a 15-minute time frame, hourly, 4-hour, daily, weekly, monthly. It doesn't matter. It can happen on any time frame. Now, of course, you would expect the higher time frame ones to happen a little less frequently, just based on the amount of time that it's going to create or take just to initially create that level in the first place. But this can happen on any time frame, okay? And this is why it's very, very important, okay? So why is this level, the one that we rejected off of over 700 points at one point today, we got a little retracement to close out the day. We'll get to that shortly, but what's the relevance to this level in the first place, okay? Now you might see that I have this Showtime, I have it labeled across numerous charts at the moment, but the reason why this is labeled Showtime is because this to me is a substantial pivot. And what I mean by that substantial pivot is because at this point, when price is approaching that level, that is the final substantial level for whatever time frame that we're looking at. And for this case, it's a daily level. This is the final bearish level that we have to contest with prior to shifting structure back bullish and running back for those all-time highs. So if you have that final pivot, which again is a bearish imbalance in this case, right? There are no wicks on either side of this candle that dates back to November 3rd. That is an imbalance to the downside. So the expectation is that if price were to get up into that imbalance again, you would anticipate a rejection from that point. But that is on a daily time frame. Okay? Remember, daily time frame. Now, if you know anything about price reading, if you've ever heard me speak about this before, you know that being able to understand higher time frame context is the most important part of trading. I don't care if you're a scalp trader. I don't care if you trade smaller time frames. If you do not have that bigger picture draw on liquidity, you're putting yourself in a terrible position, right? Think about how many times you've seen just a generic pattern and it's worked out quite a bit for you. But then one time it doesn't work, maybe 2 times, maybe 5 times in a row. You're like, why is this pattern that I've seen traded over and over again? It was working in the past and it doesn't work anymore. Why is that? I can almost guarantee you, again, back test this for yourself and prove it to yourself, but I guarantee if you go back and you see where it's failing, it's likely due to a higher time frame divergence. It's different. You have a different draw on liquidity from your, say, weekly time frame down to your daily or your 4-hour or your hourly. And when you have that type of disagreement, that leads to lower probability conditions. And I don't really want to be a part of lower probability conditions, just to be fair with you. But here's why this Showtime, instead of me just saying rejection, we're dumping, it's over, which we did, but you come on over to the weekly And why it wasn't such a sure thing, okay? The reason it wasn't such a sure thing is because technically, from a weekly perspective, we've gotten into discount. We've gotten into a bullish imbalance. The expectation would ultimately be that we run through highs. But, okay, first let me show you a couple examples of this, and then I'm going to show you why this time is different. Okay? For example, we can go back to COVID. COVID, low up to your high. Here's your discount retracement into a bullish imbalance. There is your run through highs to complete the Mando model. That would be number one. Here's your next. From your low up to your high, here's your discount retracement into a bullish imbalance. There's your run through highs. Mando model complete. In this case, this was a turtle soup opportunity from a monthly perspective, but nonetheless, from your lows up to your high, here's your discount retracement. There's your bullish imbalance. There's your run for highs. Why would it be different this time around? And the reason why I had a feeling that this was going to be different this time around is because we have something called SMT divergence across the board. Okay. And what SMT divergence is when you have one, maybe two, maybe even three out of the four major indices that we look towards have taken out a previous high. Okay. So in this case, you had the S&P take out a high. You had Dow take out a high recently. You had Russell take out a high recently. What's NASDAQ doing? NASDAQ's lagging. NASDAQ's been the laggard in this price run for quite some time now, believe it or not. Right? Very different from what we've seen over the last 5 years, where NASDAQ was really the trailblazer and moving forward really beyond the others. But the importance to this, and the reason why you would even consider, okay, well, why wouldn't we expect NASDAQ to get that high? Now, think about it this way. Inside of each of these index funds, right, you look at it from the perspective of there's a bunch of different stocks that make these up, right? In NASDAQ, you have 100 stocks that are making up that, index. You go over to the S&P, you have 500. You go to Dow, you have 30. Russell, I don't even know, but honestly, don't care either, right? There's a few different Russells, but for the sake of this, inside everything except Russell, you are going to notice that a lot of the names overlap in NASDAQ, SPY, and in Dow, right? NVIDIA, Microsoft, Apple, right? There's a bunch of them, and I'm sure there's even more. And I know that there's a little bit more overlap between Dow and the S&P as well, with some of the non-tech names, right? Because it's all separate based on specific sectors, right? But the big takeaway here is that if we swept liquidity on the others and we are reluctant to do so on NASDAQ, then the expectation in this case could be for a deeper sweeper, a deeper retracement to go find liquidity elsewhere. Now, okay, just to show you guys a previous example of this, and I had posted this early on in the week where I said, this reminds me, or it eerily reminds me of what we saw last year in quarter one. Take a look. Look at this price move that you got on NASDAQ. Lower high, right? Here, we did not take that high. Now come on over here to ES. We took the high. That's SMT. Come on over to Dow. SMT. We took the high, right? This is almost identical to what we saw last year. So to me, us getting into that Showtime level, of course, to me, the edge doesn't come from being inside that Showtime level. It is the reaction to that Showtime level. And almost immediately after getting into that level, we turned higher. We filled the dang thing. But from that point, you will notice that we started to get right into this volume imbalance here in that overnight session. And ultimately, from this point on, this just set the stage to essentially melt the way that we did, as we did not have any bullish imbalances inside of this downside run. We had a ton of liquidity to go chase, and ultimately we smoked quite a few smaller time frame levels, which brought you into a weekly bullish imbalance, which we call a bullish volume imbalance, which is also our new week open gap. Isn't that something? See, that is a gap higher to start the week. Price gets down into that gap. That is a bullish volume imbalance, a new week open gap. Come on over to your hourly time frame here. You will notice that price got into that new week open gap, swept liquidity, and bounced the way that it did to close out the day. Now what? That's the question that everybody always asks. Now what, right? I wanted to make sure that I explained this in a way that is, kind of digestible to all of you guys, a way that you guys would all understand. Now, if you're in Galaxy, you already know we've been talking about this for so long. It was really nice to see pretty much everybody was on the right side of this thing today and really had the right idea as to where price was likely to draw towards. But if you take a look now where we are, let's just go through just our generic price reading again, right? You took out these lows here with what price run? From your high down to your low, okay? You left behind relative equal lows, not ideal. Price retraces up into discount of this bearish price run, aka odd nam. First imbalance forms. The expectation is ultimately that we will gravitate up towards 50% of that bearish range. There's your 50%. Excellent. Here's your bearish imbalance that is in discount of that range. Price gets in, gets right to the midpoint of that bearish hourly imbalance, shows reluctancy to go higher, ultimately rejects. The expectation for me is that ultimately price will go through these lows and chase lower sell side liquidity, which is lower again, right? Now, the speed of that afternoon move to me is a little deceptive. We didn't really create too many levels in the process. All we did was retrace into discount for essentially another buyable dip, right? But all this is just setting up for a lower time frame Mando model here with that retracement into that bearish imbalance. Now again, this to me is a much different move than what we saw last April. Last April was, to me, I classify it as a crash. I mean, you make the move that we did in that short period of time, and not only that, but the speed in which we recovered from that point, to me, that's a crash, right? Got down into discount of the range, rocket gone, business as usual. Whereas if you look towards like 2022, where we had that long drawn out bear market, that took a year to get us down into discount of that range, right? I don't think that's going to happen, and I also don't necessarily think this is a crash just based on the size of the move. I don't really think it's too much lower, to be completely honest with you. At this point here, I think really, to me, the most ideal location for price to gravitate down towards would be this quarterly imbalance, which is at 23,904, which is like 1,900 more points to the downside. Now, when we go through some individual names in a little bit, we'll start to make a little sense of this. But to me, I think that's a really favorable location for price to draw towards. I think there's a lot of confluence in that area. You have that quarterly discounted imbalance. We would be sweeping liquidity or turtle soup on the monthly time frame here as well. You come on over to the weekly, it would be the same exact thing. Does not blow up your weekly setup whatsoever by taking out those lows, and so on down the line. So to me, again, do I necessarily think that is going to happen in a week? Probably not. I think it could last throughout February, even into March. But ultimately, this year, to me, that's all that's necessary, because again, we've been talking about this quite a bit, and I'll bring it up again. But when you look at this from a yearly perspective, I think it's really important this year that you do not at any point go to 23,114. That would prevent a yearly imbalance from forming. Right now, we got a shot at it. So even a 23.9 retracement doesn't take away the possibility of the creation of a yearly imbalance. I think we need a yearly imbalance. The reason I think we need a yearly imbalance is because if you look historically, the whole entirety of this price run, we've had imbalances form, and when we do retrace into those imbalances like we did in 2022, you get in and you get out and you make new highs, right? I think it's important for us moving forward that we ultimately create that imbalance so that we put ourselves in a pretty good position down the road as well. So that's my victory lap. That is my explanation for the move, how I got to that thesis, or where I got to that point in the thought process. Does anybody have any questions or anything like that before we continue here? So let's see. Oh, whoops, I knocked off the wrong thing. Let me just make this stream window a little bit bigger so I can see. Haha, yeah, you like the grin? Yeah, no, it was just, it was really nice to have that conviction and then get the move almost immediately. Yeah, a little smug for sure. Absolutely. Yeah, and then I saw that tweet later on in the day. I was just like, oh, brother. Oh, brother. Yeah, we could look at CVX, sure. Crypto dumping again as we speak. Well, I tweeted about this a couple weeks ago. We can let's look at crypto first, okay? Because that actually kind of did play a little bit of a factor as to why I thought we would retrace from this point as well. But for a long, long time there, you had Bitcoin and crypto as a whole really moving in confluence with what you saw on NASDAQ. And at this current point in time, for a little bit at least, he had crypto kind of front running the move down, right? You've been pretty weak on crypto now, really since October, or the end of October, I should say, and that wasn't necessarily the case on Nasdaq. So you saw a little bit of divergence, really for the first time in a long time. And one thing that I noticed about Bitcoin is that the alignment on Bitcoin throughout multiple time frames to me is like it's just smacking you in the face, right? And this kind of echoes and builds off of the tweet, and I'm going to show you a bunch of examples as well, because again, I mean, it's like you could study technical analysis your whole life. If at this point you haven't picked up on what I'm about to show you, you know, maybe you've just kind of been doing the wrong technical analysis. I don't know what else to tell you, but I will tell you this: a monthly bearish imbalance forms here on Bitcoin, okay, and that's from the November candle. Price ultimately gets up into this bearish imbalance, and next stop, discount town. Okay, so to me, I think Bitcoin at the very least 74,434, that would get you to sweep our monthly low. That would also put you inside of a quarterly imbalance. And even beyond that, if you look at it from a yearly perspective, because again, we've had a very similar move to this because it's the Mando model. This is just how the market delivers. From your low up to your high, discount retracement, bullish imbalance, run through highs to complete the model. Now, what we're dealing with right now, because again, even inside of this run, you had another Mando model, right? So, but from this point, if you were to extend the range and look from the lows of October 22 to our highs that most recently were set in this, Q3 of last year, a discount retracement at this point would get you to 70,876, which would align you with that yearly bullish imbalance. To me, that is probably your best case scenario. I think your worst case scenario would be to go towards the lower end of that yearly imbalance, which puts you around 49,000, but I do not think that's going to happen. I think, again, I don't really see too much downside overall on NASDAQ either, right? We're not really that far off. I don't think we're really too far off on Bitcoin either, but I do think 70,876 will happen. That'll get you in discount of the bullish range and set you up for another Mando model like it did back in 2022. So that's Bitcoin to me. I've been saying this for a while now. I think the writing's been on the wall for a while now. But if you look at Bitcoin from really any perspective, monthly bearish imbalance rejected. Again, Showtime. Why is it Showtime? You're technically discounted here. You don't have an imbalance, though. That's the problem. And price ultimately rejects, is going to go seek liquidity lower. Now come on over to the weekly time frame and you would see the same thing. Showtime. Bearish imbalance tagged, retracement or rejection from this point. The expectation at the very least would be for a run down through the lows that were set back in November at 85.37. I think there's more in the tank for us to retrace and ultimately go chase that 74 and then 70 again, like I said. And then even from a daily perspective, come on over here to the daily time frame, and we're about to complete the bearish Mando model here on the daily. So from a high down to your low, here's your discount retracement, there is your bearish imbalance, and then there is your flush down through lows to complete the model. Simple as that. Nothing changes in my model, okay? Now, like I said, I want to echo this, right? Because we talked about this and we said, oh, how did I not see this coming? Well, it's important. What do you see on this Bitcoin monthly chart that can be translated and looked at from other different charts perspectives, right? What happens when stocks, anything, indices form a monthly imbalance? Okay. Well, let's look at it from an index perspective first. Okay. What happened the last time that we formed a monthly bearish imbalance here? Price got in, price tagged it right here. You see that little wick? I'm going to put a little thing on the top of the wick right there. See it? Got into that bearish imbalance, the monthly imbalance. There's your rejection. There's your dump down to discount of the range, aka the odd-NAM model, the second trading model that I use. Again, there it is. Okay. Why would this one be a little different? Bearish imbalance forms, check, discount. Is it different? or was it just the speed in which it got that discount that was different? I don't know. Maybe there's something to these monthly imbalances. Okay, so we looked at it from the index perspective. Let's look at stocks. What stock? Want to do Tesla? We can do Tesla. That's fine. Okay, how about this? We'll do the most recent one, and then we can go back in time if you'd like to. Okay, here, Tesla, bearish imbalance from a monthly perspective forms. Guess what? Discount. Low, high, discount retracement, bullish imbalance, run through highs. Mando model complete. That's one. Zoom out a little bit more. Sure. Okay. How about this? Ready? Monthly imbalance. Where's the first one? Where's the first one? Where's the first one? Where's the first one? Here. Okay. Monthly imbalance forms. Where are we going? Discount. Bullish imbalance. Run through highs. Low to your high. Here's your discount retracement into a bullish imbalance. There's your run through highs to complete the Mando model. Any more stocks we want to do this on? You guys can request any. We'll look at them too. Okay. How about Netflix? First imbalance forms. What is that implying? Discount. Ding dong. Discount retracement into a bullish imbalance. Run through highs. Mando model complete. Do you know how to read price or do you not? I don't know. Nothing changes here, guys. Nothing changes here. Any questions about anything we went over? Because inside that video, we talked about Showtime. We talked about how I was able to identify the move that we got today, a day before. We talked about the Mando model. We talked about the Oddnam model. We talked about the relevance to creating a bearish imbalance on the monthly time frame and what the expectation is moving forward. What's next? I could do some individual names. We can go over some more concepts, whatever you guys want. But I know there's a little bit of a lag. So while this lags, please type them in. Let me know. And then I'll go through. We'll start off with CVX because that was the first one that was requested. But, yep, every time frame, every ticker. It don't matter. Oh, I could do Microsoft. Sure. Let's do Microsoft. Yeah, absolutely. Here, let me do Microsoft first, and then I'll do that Chevron. Because Microsoft is... you're absolutely correct. Your retracement has been engaged. Okay, so ready. Low up to your high. Not quite discounted just yet. No problem. Okay, we could still close inside this quarterly imbalance, right? We haven't formed an imbalance down, so nothing's implying this just yet. We can very well stick this. Okay, and here's why. Come on over to the monthly. Okay, what happened here? Oh, you're starting to see that. You're starting to see this Showtime come up a little bit, eh? There it is. First bearish imbalance. What is that telling you? Discount. Where's discount? 449. Ding. Retracement into a discounted bullish imbalance. What happens next? It's going to take time. It's a monthly. But yeah, I like Microsoft. I like it from a larger time frame perspective, though. Because despite Microsoft really leading this downside move, I think Apple can catch up. I think Tesla can catch up. I think Nvidia can catch up. Netflix has a chance of catching up to the downside. But yeah, I wouldn't be surprised if we, stick in here for a little bit. But I think this is pretty decent on Microsoft right now. Deeply discounted here on the monthly with a bullish volume imbalance and a bullish breaker in discount of the range. I mean, you can't really ask for too much more than that. So, yeah. Yeah, they're pretty good. I don't know why this chat doesn't automatically load, though. That's kind of problematic. So let's get these up. Yeah, there we go. All right. So let's see. So there was the Microsoft. Let's do Chevron. That was asked about next. So Chevron. Okay. So Chevron. You guys tell me. Where's Chevron going? Low, high, discount retracement into a bullish quarterly imbalance, swept liquidity in the opposing direction of your overarching trend, and also got into a quarterly bullish breaker. Where's Chevron going, guys? You tell me. I don't know. I've never seen this before. Never seen it before. All right, next up, let's see. What do we got? What do we got? We got okay, so we did Microsoft. Let's do Coke. KO. KO. This is a good example to throw in the mix. To me, this is not for me whatsoever. Here's why. We're nearly at all-time highs. There's really no additional information beyond the all-time highs. We've never been to that point before. Therefore, there's no liquidity that we're going to attack up there beyond the all-time high. So, when I get in a situation like this, like or this close to all-time highs, I tend to not really look into these, especially when there's nowhere above us that we can specifically target. We've never been there before. There's no liquidity resting above that point. Um, so yeah, Coke. I mean, to me, it's probably going to go back to those highs. I don't see why it wouldn't. But beyond that, I don't know. We've never been there. There's no liquidity up there. So next up, AVGO. All right, let's take a look. Beautiful. Okay, so AVGO, massive, massive price range here from a quarterly perspective. We did get into a quarterly imbalance, bullish imbalance, which is good. This quarterly imbalance, let's just see inside that run. Not technically in discount of the range. This is not the end of the world because we haven't formed a quarterly imbalance to the downside. Nothing is suggesting lower just yet. Let's see what the smaller time frames tell us. AVGO, again, has not formed an imbalance to the downside. So nothing is technically implying that we necessarily need to go lower just yet. We do have discounted bullish imbalances, which are nice, but we actually caught this monthly imbalance thus far, and we're respecting it. So again, we haven't formed an imbalance down. Nothing is really even initiating that odd NAM model, which is the secondary model that I use, which would be that imbalance down. I would then expect this, but nothing yet. We can very well catch this. We can push it higher. Let's just see from a weekly perspective now. Yeah, AVGO from a weekly perspective, believe it or not. Okay, so your bullish breaker was created here. So you have your low up to your high. You actually got discounted. You got into a bullish imbalance on AVGO. So I really don't hate this one. I think if you were to slip up, and here's the problem with AVGO in the first place. It's kind of a big range, right? What is that? 287 is where the trade would go wrong, right? Lower the candle that created the imbalance. That's probably a little too big for me from a weekly perspective, but I don't dislike this setup knowing that we've gotten into discount already. Let's just see if the daily, if it kind of tightens up at all. So yeah, here again, so range expansion. Here, so far so good. We got into a bullish volume imbalance, respecting it decently thus far. There is a bearish imbalance overhead here. Hold on. Whoops. And I should put this. That's where we rejected from, just so you guys know. Levels aren't made up, by the way. And this is what we're dealing with right now. So AVGO, to me, I'd like to see some urgency higher. So I'd like to see a bullish imbalance to the upside form. Very similarly to what we just talked about from a monthly perspective. When that first imbalance forms, then I expect discount. The same thing can apply to the downside. The first imbalance up here, I would feel comfortable that price would ultimately gravitate towards discount of this bearish price run, which is at 364. So yeah, I would like to see a bullish imbalance form here on the daily time frame, and then at that point I think we can go chase these relative equal highs and get to that 364 mark. I think that would be ideal. And your range, no, I'm sorry, your range it's wrong. It would be discount of the range at 369. But again, until that imbalance forms, nothing's really implying that we necessarily need to go see discount of this range just yet. Okay. So that is AVGO. All right, let's see. Let's come back over here. Let me click on this chat real quick. Make sure it's updated. Remind folks about trade structure going in. Fair value gap candle that created the imbalance. Trade starts up. Sure. I mean, I don't know. Should I give it all away? I guess I could. But essentially, here's the power of the imbalance. Okay, I just made a new video about this too. The power of the imbalance. The imbalance shows you where there is a clear lopsided delivery in price. But that imbalance to me is also my entry. It determines where my stop loss is going to be. So if a bearish imbalance forms, my stop loss is going to be, in the bearish case, is a bearish imbalance. My stop loss is at the high of the candle that created that imbalance. If it's a bullish level, my stop loss on the bullish level would be the low of the candle that created the imbalance. If that is too big, if that's too many points, then that's just something I don't trade. Or I go to a smaller time frame and I try and be a little bit more precise with it. But that's it. Nothing changes inside the overall idea. It's just a way for me to structure the trade idea always. And my target would either be a bearish imbalance overhead, a bullish imbalance if I'm looking short and I'm looking for price to go lower, or I'm looking for liquidity, which would be your swing high or swing low. That's it. Simple enough. It's two trading models and it's all structured because I needed that structure. I didn't have that for a really long time when I was doing this. So the wins would be really big, but the losses would also equally be big. And it's really hard to survive if every time that you start to get on a run, you start to perform well, you run into a situation where now you're getting whacked. And if you can't control those losses, I mean, all those wins that you just had are probably going to go with it. So it's not really a good position to be in with trading without any structure. That's why I think I personally think no one should be trading if you don't have a model. That's my take. Um, it's too dangerous, until you really understand like how price moves, why it moves the way that it does. Um, I think it's just kind of reckless to be trading without any structure. So hopefully that answers that. That was a little more in depth. That's a little mentorship stuff, but loving the Showtime levels. Yeah, you could see the efficacy, right? Um, if you can reiterate on not creating a volume imbalance on the NQ yearly time frame and what that would imply, yeah, sure. So basically, what I'm thinking is, from a yearly perspective, I think it's really important to create an imbalance because if you go back historically and on this grind higher, right, we were creating imbalances. You created one in 2013, you created one in 2017, you created one back in 2020. What I'm a little nervous about is that if we don't create one, that really doesn't offer us as much support moving forward way down the line, right? So for example, like, yeah, we had a bear market in 2022, but that literally just brought us into a discounted bullish yearly imbalance, and you could see the result from that level. So that's like, if we don't have one, that's kind of scary to me. Like, what do we catch on if we were to ever retrace pretty aggressively. So that to me is really scary. And I really hope this forms. It could even, again, if we see 23.9, that quarterly imbalance, which we very well can, we'd still have something like this. But, I really want a bullish yearly to form. Just like looking down the line, I think it would be really scary if we didn't, because then at some point I wouldn't totally rule this out. It would probably be some sort of financial crisis that they blame it on, but that, if there's no imbalances here, I don't see where it would catch from except here, which is really, that would be really bad. That's an over 50% move. So I don't think that's necessarily the like, I'm not, you know what's it called? I'm not saying that that's gonna happen, right? I don't know. We still have a chance to form this. It's gonna take a year, right? But like from a larger scale, like I would look at that, and then yeah, it's just really, really that would be totally scary to me. So yeah, we can look at CLS, sure. Let's see, CLS. All right, CLS. So CLS is way in premium from a quarterly perspective. You actually have a chance. Now, again, this is from a quarterly. We'll work our way down in time frame, but from a quarterly perspective, you're kind of you got a chance of forming another quarterly imbalance, believe it or not, which is here, right? Thank you, Alex, for reposting the stream. Everybody else, please like it. Please share it if this is helpful to you. Maybe you can help somebody. Maybe you could save someone else from following one of these people who, you know, don't really know what they're doing, and or maybe they do and they just won't tell you. But I doubt they do. But you have a chance at forming quarterly imbalance. Again, this would have to hold up for 2 months and 2 days. I'm not necessarily sure if that'll happen. Let's see from a monthly perspective. Okay, so the monthly created a volume imbalance, but not a fair value gap. It's not the end of the world just yet. Okay, I don't like the lows that it put in, right? These are relatively equal. There's no imbalances in between here. There is an imbalance here from a monthly perspective at 246. And then again, you have another, which is still in premium. That's at 230. Let's see if anything is implying downside from a weekly perspective just yet. No, not really. I mean, there's a ton of terrible relative equal lows. There's a lot of liquidity here. Ready? 1, 2, 3, 4, and 5. Okay. You also have some relative equal highs, believe it or not. These lows are horrible. I would feel very unsafe knowing that these are below me. There's no imbalances in between. And if you buy into the idea that the job of the algorithm that's delivering price is to go and find that liquidity, that's a prime location for it. So while this has not necessarily formed a bearish fair value gap, it has formed a bearish volume imbalance. There's your rejection from that point. And at this point, you know, there's a lot of liquidity below. So not really too hot on this one from the upside. Thank you, Trading Songs 23, for reposting the stream. You guys should follow him too. He's a beast. All right, so what's the next one here? Let's see. LIF. Okay, let's do LIF. I've never heard of this, I don't think. Ooh, okay. LIF, eh? This one's not too bad. So we have a discounted quarterly imbalance here. It's pretty good. And again, just for reference, you know, he keeps bringing up imbalances. What does that mean? Just go back and back test it. Find the imbalance here. Look at the reaction to the imbalance. Price gets in, price gets out. Goodbye. Right? Remember, this is a quarterly that's 3 months inside that candle. That could take some time, but pretty good. Pretty good so far on this one because this is also a discounted quarterly imbalance. Really not bad at all. Now, let's come to the monthly. Monthly as well. You got a discounted imbalance. Now, I don't really love that. I don't really love that, just to be fair. So, but it's not the end of the world just yet. Okay? Just yet. This would be the pivot. This would be the bullish Showtime, right? If you were to, you know, look at it from this perspective, it would be the same thing. Just from the different angle, right? Showtime doesn't always have to be bearish. This is the last bullish imbalance inside of this range. This is being very important to catch, okay? So let's see from a weekly. All right, so we are still respecting bearish order flow. We rejected out of that weekly bearish imbalance right there. Prior to that, you rejected out of this weekly bearish imbalance. And then even prior to that, you rejected out of that weekly bearish imbalance. Oh my goodness. Are these levels made up, man? Wow. That's something. That is something right there. But there's a bullish level right here, which we are currently inside of. We respected the midpoint of that imbalance quite nicely. One thing about this one, just for me personally, is right now we're showing no urgency to go higher just yet, right? We got into the bullish level. I understand that you haven't created the imbalance up yet from a weekly perspective. You have a weekly bullish breaker. You actually have back-to-back bullish breakers. And did we tag this? Oh, we did. That's a volume imbalance there. You could go back and tag that. That's a new week open gap. So what is that? 56.84. Let's see if that has any alignment with the daily imbalance. If it does, that's pretty good. Yeah, it's not bad. It's not too bad. So just based on how I would map this and how I would map any trade that I would take like this, it's always the same. My stop loss is at the low of the candle that created the imbalance. So the low of the candle that created the imbalance in this case is 53.84. Does that line up with the weekly imbalance? Yeah, it does. I think you could even, you know, give it a little bit more wiggle room down to the low of this candle at 51.70. But again, now I look at it, I say, okay, we're currently at 58. I'm risking $7 for a potential win of what? You know, take profit at the highs at 71. So that's, you know, risk 7 to make 13. Does that make sense? That is the thought process I go through every single time on every trade that I take. Again, it's going to take a lot of stress out of it. When you go into it understanding, okay, I'm risking X amount, I can make this amount. Okay. If that's too much, then I don't take that trade. I go look for something else. If that makes sense to me, maybe I give it a shot, right? Like that to me, it takes a lot of stress out of it because you don't there's no surprises. You're not going to be surprised by the movement, So, but that is yeah, that's life. That's a pretty good one though. Good find. I'm curious to see how this one shakes out. I'll keep this one tabs on this one. Pretty cool. Okay, so that is Life 360. So let's see. I could do a couple more. I got some time. Um, Twilio. Oh, Petey boy. Peter. Oh, I can't wait to talk, Peter. We're gonna have a good chat today, Pete. All right. So let's go TWLO. Twilio. Peter from Rumble. All right, here it is. So Twilio's quarterly actually doesn't look too bad. Okay, we spent 5 quarters inside of this bearish imbalance. It is in premium of this bearish range. So while it did act as a speed bump, I wouldn't necessarily look at that as anything more than just a speed bump at this time. Okay, we're back tapping this quarterly imbalance. I'd like to see this inverse. I'd actually like to see Twilio drive price there. So let's go take a look here from a monthly perspective. Okay, monthly's decent. I think we get into that imbalance there at 114. So you got a little bit of ways to go to the downside first, but again, the big picture to me looks higher. I do think we go lower first to sweep these relative equal lows here and here to get you into that monthly. What is the relevance of relative equal lows? That's two pools of liquidity, right? Think about it. You don't even have to trade the way that I do, but what's the only possible explanation as to why price would leave from this point right here? It put its foot in the ground exactly at 114.72. What had to have happened? Well, you know, I think everyone across every different discipline in trading would say that it was likely, buyers stepped in, right? And if buyers stepped in, where their stop loss is going to go, right below that. So that's where the liquidity is. Same thing would apply here. For us to put our foot in the ground right here and make the move that we did, that is leaving behind relative equal lows. That is now two pools of liquidity for price to go seek later. So I would feel pretty good about price getting into 114. Again, it is a little bit wider from like a monthly perspective, but I think it can go up from that point. Let's see. Yep, check this. Okay, Showtime, bearish imbalance, the final bearish imbalance inside of this range. Price rejects, ultimately seeks lower. You have relative equal lows here, but also high down to your low, discount retracement into a bearish imbalance, flush down through lows, completes the Mando model here at 116.11. So yeah, I definitely think it's going lower first, and then after it goes lower, takes out those relative equal lows, gets into that monthly. I think it looks pretty good. So that is Twilio. All right, so what's next? Let's see. Sorry to backtrack on this, but is SMC generally an indication market needs to hunt for liquidity? Likely, right? Think about it. I know this is going to sound silly, but one of two things are going to happen when you take liquidity. You're either going to go up or you're going to go down, right? You're either going to have that breakout or the fake breakout, right? What does that mean, right? What does that mean? Well, if we can take that liquidity and generate enough liquidity in that sweep to close above that high, you're likely going to create an imbalance in price through it. And if you do that, that's when I would anticipate a continuation type of move. But if you sweep liquidity, close below that previous high, my expectation is that we need to go seek liquidity lower. And, that can be in the form of an imbalance. That can be an internal range low. It doesn't necessarily need to be the end of the world. It could just be looking for some liquidity inside of the range. So yeah, that's what SMT to me would indicate. Yep. Hold on one sec. Let me just share this real quick. If you haven't shared it already or liked the stream, I would appreciate it if you did so. If we do some serious numbers, which it's 700, that's pretty good. But I'll do more public streams if you guys like it. But maybe not, actually. We'll see. Got to keep it for the homies in the galaxy. All right, let's talk about Oracle. Peter, my man. Let's talk. Okay, Peter. So let's go to Oracle from a quarterly perspective. Okay. So now Oracle from a quarterly perspective, you have a quarterly imbalance here. Okay. You got 2 months. You could still close back inside this imbalance as well. And you're also tagging a previously filled bullish imbalance here at 164, right? Come on over to the monthly. And again, you are now in your monthly, deeply discounted inside of a bullish price run from your lows up to your high. Again, deeply discounted. We have a bullish imbalance and we have a bullish breaker. Okay. You still have 2 more bullish levels below you as well that can hold this up. At this point, you would anticipate Oracle to kind of put its foot in the ground and start to make some progress higher. But until an imbalance forms to the upside, nothing is implying that you're going higher from this point. Okay? So despite getting into this imbalance, even from here, right, we ran up, and this was a bearish daily imbalance. We'll get to this in a second. We're on the weekly right now, but ultimately price is gravitating lower. There are still many, many bullish levels below us. But what you want to see is some urgency out of this discounted level to imply that you will start to put your foot in the ground and make progress higher. Come on over here to the 24-hour on Oracle, right? What is this? What have we been going over inside of this stream over the last hour or so? I've been talking about the same exact setup from high down to your low. Here's your discount retracement into a bearish imbalance. There is your flush down through lows to complete the Mando model. How many times have you heard that over the last hour? That's the setup. Nothing has changed in terms of the urgency to shift structure or move higher at this point. So right now what you're dealing with is you have a high down to your low. So despite it getting into all of these bullish levels, until it shows some urgency to move higher, nothing is implying that we necessarily need to move higher. So what are the steps? Okay, you have a bearish level here. We've already gotten into it and rejected from this point. Okay, what you would want to do is you would want to take out this 185.91, and beyond taking out that 185.91, you would want to close above that candle. Okay, closing above 185.91 would imply a bullish breaker. Low, high, lower low, break up and through. We would anticipate the high of that sequence to act as a support level moving forward. And from that point, we would expect a continuation move higher. An example. Go to AMD from last year. Okay. Zoom it all the way out. Okay. Now, AMD. What happened on AMD? You had so many bullish levels and you filled almost every dang one of them. But guess what? When we started to shift structure, what happened? We got our price run here, took out this high, closed above it. What happened here? From this run, we took out this high here, we closed above it. Oh, whoops. What does that create? A bullish breaker. What is a bullish breaker? A low, high, lower low, break up and through, and we would anticipate the high of that sequence to act as a support level moving forward, aka the most powerful setup in trading, aka the bullish breaker, aka the reversal pattern, the change in the state of delivery. There it is. There it goes. Okay. So despite Oracle having all of these bullish levels in the world, it has not shown you even a sliver of urgency to go higher. The only bit of urgency that it had to go higher was to get you into that bearish discount, which I tweeted about a couple weeks back. Price got in, price rejected, Mando model complete. So that is Oracle. Okay, and this goes for a lot of names right now, believe it or not. Okay, again, right, we're talking about this model over and over. High, low, discount retracement into a bearish imbalance. Bloop. Okay. So let's see what's next on the agenda here. All right. Curious your thoughts on Hood if as it got into its quarterly today. Looks like it wants 87. Appreciate all you guys for sharing this as well and liking it. I do. because I do get frustrated sometimes on X, because sometimes I'll get like crazy numbers and then other times I get nothing. It's like, do you guys want me to post or not? Yeah, so Hood, let's look at Hood and then we'll keep going. I'm just gonna move your thing down so I can see everybody else's newer posts. So Robinhood, if it has a quarterly, it's in premium. Yeah, it is. So let's see. All right, the price run to take out that high would be from your low up to your high. Yeah, we're still technically in premium. I have an alert set on Robinhood at 89.48. That would align with your month. Oh my gosh, it got here pretty quick. Wow. Yeah, I think that's where it's going. I think it's going to go to 89.48. That is a discounted quarterly bullish imbalance. Come on over to the monthly. Okay, monthly bearish volume imbalance. Price got into the bearish volume imbalance. You do have a monthly volume imbalance here. Again, this is not really something that I'm anticipating holding up, because it's in premium of the range, right? I want discounts. You see how often price goes into discount of the ranges. Why would you be buying premium? It doesn't make sense. You're overpaying for the position. So I do think it's going to go here ultimately. If it leaves from here, so be it, but I doubt it. Let's just see the weekly as well. What time frame do you look for imbalances? Every time frame. Any time frame, any ticker, it doesn't matter. But what's important to note is that higher time frame imbalances will carry more weight. They carry more weight because, think about it, inside of a 5-minute imbalance, it's only 5 minutes worth of orders, right? You're creating an imbalance, sure, but it's only in 5 minutes worth of orders. Whereas if you go to a monthly imbalance, that is a full month's worth of orders are imbalanced in a specific direction. It's probably going to be pretty strong, right? Um, yeah, and then look at all these relative equal lows on Robinhood too. Yeah, Grayson, I think I'm feeling pretty good about Robinhood going down into that quarterly discount. I think that'd be great. Monster Stonks. Who is this? I just don't know your Twitter. Um, Today's monthly close is important and is considered a directional indicator. US 500. Um, is it? The month isn't over. Monthly close is important, but um, the month isn't over. It is important though. You were absolutely right about that. Yeah, and US 500 in comparison to what ES looks like, it looks way different. So, yeah, no, monthly, quarterly closes are important, true. We still got a couple more days, or at least tomorrow. So it is important, but I don't really think it's offering you too much insight right now from a monthly perspective for your in terms of your draw on liquidity. I don't think it's giving you too much, specifically on ES. We just took out all-time highs on that, 6773. That's fair. I mean, maybe discount. Discount might be too much though. You might not even get that discount. We'll see when the time comes. We got to walk it down, and we got to see where they are in alignment as they go down. Obviously we put a focal point on NASDAQ as it was the leader for quite some time, but that makes sense. Appreciate the analysis. No problem, man. Yeah, definitely on the same page there. SGML, sure. I think this might be one of the last ones. So SGML, pretty good. You got a chance at creating a quarterly bullish imbalance, and you mitigated a bearish level. That's really good, from a higher time frame perspective, of course. I'd be curious to see if this forms and then you get into it next quarter. That might be a little bit too far down the line. Let's see. SGML, we just swept liquidity, and right now we're in the process of closing below it. If you close below it, then I would anticipate you go and get this bullish imbalance here and discount of that range. I think that would be better. right here. What is it at? $9? $9.37. That's just from a monthly. Let's see the smaller time frames, if anything's even implying that. But just the way that we're looking to close the quarter, there's only a day left, or the month. I'm sorry, not quarter. Yeah, there's some relative equal lows here as well, and you got a big fair value gap here. So I think that would be favorable, like 909. That puts you inside the monthly. It would inverse the quarterly as well. So I think that is more likely to happen. So yeah. So anyways, yeah, I think that's all I got for tonight though. So we'll be back on tomorrow for some live trading. I'm very impressed and very happy to see so many of you guys have good success today. You guys were really on it. That was awesome to see. You know, just keep getting better. That's all. Little by little, and it's nice to see that it's kind of the entire unit going in the same direction, which is really, really nice. So yeah, that's all I got for now. So we'll do live trading tomorrow. We'll have another one of the 2026 mentorship videos coming out this weekend, and then we'll be back for weekly prep Sunday night. So and oh, actually, it'll be a monthly prep. So I might do it publicly. Let's see. I think I was gonna just do one public stream a month. I think that was what it is. So all right, guys. Good stuff tonight. Thanks for joining in on the victory lap. I hope everybody does well tomorrow. Good luck, and we will talk soon. When you're ready to stop playing the lottery and actually learn how to do this, come on over to Galaxy Trading for thousands of hours of educational content, weekly class sessions, live trading, and a kick-ass group of traders. The best part? Actual timestamps and receipts of our work. Once you see it, you can't unsee it, and you'll never go back to the way you're trading right now. See you soon.